Hello everyone and welcome to my channel. So today we're going to talk about TGIF. So TGIF is a Friday trading model. There are people who use TGIF and they're able to successfully trade with it. I like having TGIF in my trading arsenal because in case I miss setups during the week or I don't get any setup during the week, on Friday I can trade TGIF. So TGF model focuses on trading the reversal, which we also call the protraction of the weekly candle on Friday, as price retraces to close the weekly candle. So we anticipate that once the weekly candle forms the high of the week for a bullish week, or low of the week for a bearish week, price will reverse approximately to 20% or 30% of the weekly range before the candle closes. So this is an example of a bullish weekly candle. So a bullish weekly candle will open the week, form the low, form the high, then close the week. So TGF, remember we are trading on Friday after price has already expanded. We've already gotten the bullish expansion to form the week high of the week either on Thursday or even Friday. Then after we have formed the high of the week, we want to see a reversal or a retracement to finally close this candle. So this retracement or reversal is what we are trading as TGIF. And we have said that we anticipate that we are likely to get the retracement to either 20% of the weekly range or 30% of the weekly range. So you will need to get a Fibonacci tool and get the tool from the low of the week to the highest point on Friday. Then we anticipate that we are going to have that retracement to either 20% of the range or 30% of the range. That is what we're going to trade as TGIF. For a bearish week, still the same thing, but a bearish week, of course, is the opposite. You open, we form the high, then we get an expansion low to form the low of the week, and then we close. So once we form the low of the week and we are closing the week on Friday, this is what we trade as TGIF. Again, you'll need your Fibonacci tool. Just take a screenshot of this so that you can also put these levels 0.3, 0.20, and 1. So 0.3 is 30%, to 0.2 is 20% of the range. So you're going to mark from the high to the low. Then we anticipate we're either going to get that protraction to 20% of the range, which is 0.2, or 30% of the range, which is 0.3. So yeah, this is just an example of a bullish candle. So TGIF is after we form the high of the week, as we're getting that reversal to close the weekly candle, that's TGIF bullish. Bearish, again the same, from the high to the low. As we again reverse, once we form the low of the week, we reverse to close the weekly candle. That is TGIF. So now, not every week will form a TGIF setup. There are some things that we need to look for to get a high probability TGIF setup. So if we look for TGIF in a week where Monday or Tuesday has formed the low of the week for a bullish week, or high of the week was formed on Monday or Tuesday for a bearish week. So this is a classic expansion weekly profile. So this is, you just need to know weekly profile for you to understand this. I teach all this in the bootcamp that I normally have every month. So this here is an example. So this is an example again of a bullish weekly candle. Okay. So we said for a TGIF to form, we need to see, for a bullish week, we need to see Monday or Tuesday forming the low of the week. Because remember, we open, we form the low. So either Monday forms the low of the week or Tuesday forms the low of the week. Then we get the expansion on Tuesday, Wednesday, Thursday. So that is condition number one. Condition number two, we need Thursday candle to be an expansion candle. So let's have a look at examples here. So Thursday, that's condition number two. We need to see Thursday also as an expansion candle. We don't want to see Thursday as a reversal candle for high probability TGIF setup. Then our Friday is when we expect to trade a TGIF setup. So Thursday can form the high of the week, or there's some weeks where you'll have Friday sweeping Thursday high, forming a new high, forming a high of the week before finally we get our Friday TGIF setup. So that is very important, guys. So this is an example of a week where we got TGIF on Friday. So you can see right here, we open the week. So this is Monday, Tuesday, we form the low of the week. You can see we sweep Monday's low, we form the low of the week, then we get the expansion. Wednesday, we also get an expansion. Thursday, we also get an expansion. So by the time you're coming to your charts on Friday, we look at the conditions for TGIF. Number one, did Monday or Tuesday form the low of the week? Yes, Tuesday formed the low of the week. So that's condition number one, which checked. Condition number two, we need to look at Thursday. Did we have an expansion on Thursday? Clearly, you can see on Thursday this was a bullish expansion. So condition number two, check. So on Friday now, we are good to look for TGIF setups. And you can see on Friday, we swept Thursday high, formed the high of the week, and then we got that reversal and closed the weekly candle. So this chart here is an example of Euro USD, and I traded this TGIF setup on Friday. We will have a look at it shortly. So once all our conditions are met, so we are ready to look for TGIF setup on Friday. Um, TGIF setup, we trade it either during London session or you can get it during New York session. So any of the sessions. So London session starts at 2 a.m. New York session starts at 7 a.m. New York time. So there's some things. Remember, TGF, you're trading what? A reversal. After the weekly range candle has already formed the high of the week or the low of the week, we now expect a reversal to close the weekly candle. So literally, we're just trading a reversal. So because you're trading a reversal, there are some things, confirmations we need to confirm that this market is ready to reverse and we are done with the expansion. So we're going to look for just the common normal ICT reversal, smart money reversal patterns. SMT is one of them. Change in state of delivery is another you expect at point of reversals. Inversion, fair value gaps, market structure shift. So it's not a must you get all of these, but it's even better when you have all these at that point. So on Friday, I took a TGF trade on Euro USD and I updated my community members. I told them that I was expecting TGF setup for major pairs. So Euro USD, we formed the low of the week on Tuesday, and on Thursday we also got an expansion. So of course that qualifies for a TGIF on Friday. I used 2022 for entries. So let's just move to the charts and see. So this is Euro USD, and this is Tuesday, this is Monday, Tuesday, Wednesday, Thursday. So Tuesday has formed the low of the week. Thursday, we also have an expansion, and this is Friday candle. See, Friday candle is a bearish candle. So this right here is what you're trading as TGIF. So if you come to the lower time frame, this is what it looks like on the 1 hour. You can see that is what you're trading as TGIF. So Euro USD, by the time you come to your charts on Friday, this is what we had. We had this inversion fair value gap for inversion fair value gap that price had tagged. So this inversion fair value gap, I was watching it as a draw of liquidity for price. But as you can see, we also wicked and tagged this gap right here. So if you move to the 15 minutes, which is the lower time frame of the 4 hour, of course, during kill zone trading time, you can see this was the bullish move. This is the wick that tagged this volume imbalance. And these consecutive bearish candles did what? We formed a change in state of delivery and also market structure shift here. This swing low here, this is the market structure shift. So once we had that, of course, what do we have here? This is a breaker. So I used the breaker for entry. So these, and you can see finally, these candles here is the one that would have tagged you to take an entry, and we had that bearish move. And this is 30%, 0.3, this is 30% of the range and 20% of the range. So this move here is 50 pips. So this is a full day of trading. You can see clearly TGF is a bearish daily candle on Friday. So that's a full day of trading. So those are a good number of pips. Then let's look at the example of GBP USD. So Tuesday formed the low of the week. This is Monday, Tuesday, Wednesday, Thursday. So Tuesday formed the low of the week, and Thursday we're having an expansion. So this is a classic weekly expansion profile. So this is Friday. Friday, you can see it's a bearish candle. So this would have been your TGF setup. This is what it looks like on the lower time frame. Tuesday, the low of the week. Thursday, we have an expansion. Then Friday, you can see we're having that bearish move, and this is 30%. So we got to 30% of the range. That would have been your trade for Friday. USD CHF, you can see Monday. This is Monday. Monday formed the high of the week. Then it is Tuesday, Wednesday, Thursday, and Friday. See, Friday is a bullish candle. You can see all these at some point was a bearish candle, and then we finally had all this retracement to close the bullish candle. So that retracement is your TGIF setup on Friday. And this is what it looks like on the lower time frame. Thursday, we have an expansion. Friday, you can see we still had that retracement or reversal to 30% of the range. That is all you need. This is a USD JPY example. So this is Monday. Tuesday formed the high of the week. And then we had expansion on Wednesday and Thursday. Then Friday. See how Friday closed as a bullish candle. You can see we had at some point had all this move to down here before finally getting all this reversal and closing as a bullish candle. So this reversal or this bullish move is your trade on Friday. So this is what it looks like on the lower time frame: Monday, Tuesday, Wednesday, Thursday, and expansion Friday. You can see we still had that move towards, we had the reversal or the protraction to 30% of the range. That's all you need. To get a copy of this PDF, check the link in the description and also the pinned comment.